Good afternoon. Merry Christmas. We are coming to you live this afternoon before we wrap up the week. A lot of numbers just came out. We have hogs, pigs. Tony Dunker's going to talk about that. Mr. Brady Huck is in the backdrop. He's going to talk about cattle on feed. A lot of information. I know they've been chewing through the numbers, and we will bring in Mr. Brady Huck himself. Wishing you all Merry Christmas. Of course, thanks for watching on YouTube. We have you on LinkedIn for the first time. We are able to take questions if you subscribe to the Advanced Trading YouTube channel. If you are polite enough and ask a question, we will try to do our best to answer it. If you do ask a question, we have a gift with none other than Mr. Brady Huck.
All right. Floor is mine. Good deal. Well, cattle on feed report, I'll start with that. Initially bearish at first glance, it's bearish. Get that throat up there. On feed number at 102.7, the average guess 102.2. It's at the top end of the guesses. Actually topped the guesses. 102.5 was a high guess, and so 102.7. Placements were 1.9% higher than the average guess, and also near the top end. The marketings, that was below the lowest of the guesses at 92.6%, with that low guess at 92.8, and the trade expecting 93.2. 313,000 more head on feed versus a year ago. We crossed over the 12 million head threshold there. Jump to that next slide if you would, Tommy. Crossed over that 12 million head figure on feed. 270,000 of the 313 more head on feed, that actually comes in Kansas and Texas. If you see those numbers there, 170,000 more head on feed in Kansas and 100,000 more in Texas. So potentially see maybe a north-south premium divergence like we've seen in the past. Maybe we see that grow with the pressure down there. Go ahead and jump to that next one. This is placements and the snapshot of placements. And if you want these graphics, we can send you in our full email report. But if you don't get our emails currently, shoot us an email and we'll get these in front of you in the full post report. But from a placements perspective, Kansas and Nebraska were down versus a year ago. Kansas at 92% and Nebraska at 97%. So that kind of an indication, with Kansas on feed numbers up, but placements down, where those backlogs really are. But Texas, and I got some friends in Texas, and Texans, we still love you, but you disappointed us on those placements. 105% above a year ago. 370,000 placed last year, 390,000 placed this year, placed 36,000 more head total than the trade was looking for, and 20 of that came from our boys down south. Caveat though, those placements in Texas were the 20,000 were below 700 pounds, so pretty light end on the placement side of things down there. I don't know. Looking at this, here's a great graphic here of showing September and October are the highest placements months of the year. Wish we would have seen that red line drop a little bit deeper in November. Maybe we'll see that. There's only so many calves out there, so December, January, February, maybe we'll see it dip deeper below. Hopefully we got all the bad news behind us here. Is that all the slides I got? We got one more?
You got a couple more.
Got a couple more. Okay, this looks at the marketings a little bit. And it continues with the theme that Texas just disappointing. 89% marketing pace versus a year ago. We love you, Texas, but
everything's bigger in Texas.
Everything's bigger. Placements placements were definitely bigger. No, that applies, Tony. Yep.
You got a couple more slides here, buddy. You were on a slide roll there.
This is hogs for Tony, and she's got her own deck.
Okay.
I'm going to jump through that one real quick. Skip through that one. And then cold storage, we can pick that one up after Tony
We
goes.
can get that. Yeah, that's just how to get hold of us. Let's get Tony on here. All right.
All right.
Tony, stage is yours. What do you want to talk about before we start going through the PowerPoint?
So I will say hogs today just traded very mildly higher. A lot of anticipation coming into this report. Much discussion on what's going to happen after the first of the year with sow inventory and what we're going to see there. So let's just jump right into the report. Today's a kind of a trifecta day on livestock reports, and so if you can throw that first slide up for me on the pig crop report, I'll run through this rather quickly here, but all hogs in at 75 million head, and that's probably a slightly negative number on the nearby pig crop. We did see revisions for the pig crop on all hogs up 1.5% from the September crop report. Shouldn't have been a surprise, because if you watch the kill, we've been running about 1.5% to 2% higher than what they were pegging that at. So I don't think that's necessarily a surprise, but maybe we'll temper those nearby months a little bit Tuesday morning when we open up. Probably a friendly surprise would be the breeding number. And so when you look down there at that breeding number, basically about 3% lower. And that's what we need for longer term, fewer hogs. Um, Interestingly enough, we've got, and you can flip to the next slide there, Tommy.
Absolutely.
As a matter of fact, flipped one more time for me.
You got it. I'm going to blow that up
This
so we can see it.
Yeah, there we go. This just shows you the trade expectations versus what came out today, and those red dots are what numbers were reported, and we like to see that breeding hog number way lower than what was expected, and so that maybe gives us some friendly emphasis for those summer months and into fall next year. That's what we want to see. Um, flip to the next slide if you don't mind.
Mm-hmm.
Here's the part that just is puzzling and continues to make people second guess our quarterly reports. These are the revisions for the past few years on the quarterly hog and pig reports. This is revisions that happened today. And if you look, they revised higher every quarterly report that they put out this year and every quarterly report that they put out last year for more hogs than what we were anticipating. And
That's the red
so
line, Tony.
that is the red line. And so when you look at that, you sit there and think, okay, you know, you want to be excited about that breeding number being lower, but when you back into all of the revisions that they did, that makes that 3% look maybe a little questionable for for going forward. So I would probably finish up this with just saying that it's kind of moderately bearish for the nearby pigs and friendly probably for those deferred months, summertime and on further out. And I think the market kind of had that in there already. I mean, we've been trading mid 90s here over the past few weeks for the summer months, and we backed it up a little bit last week, kind of came back up seasonally right now. December, we can usually see a little bit of a push higher in those summer months, and we did. And then seasonally, we will see them, kind of slide backwards in that January and February timeframe. All in all, until we get to summer, we are still looking at negative returns for hog feeders. That's the bottom line.
That would be this sign right here.
That would be definitely that sign. So fasten your seatbelts. Come Tuesday morning at 8:30 when we reopen those livestock markets.
But before we open those, we still have a couple things we could do. You guys want to talk about this a little bit? LRP quotes, good until Saturday. This is bizarre that we get to talk about this.
Fire away, Brady.
Yeah, you bet. So we'll get fresh LRP quotes here at 4 o'clock in another hour, and those will be actually on the settlements based on today for hogs and cattle. So if you've got some cattle and you want to buy some protection, give us a call. We can definitely get that on and talk you through how we can get that in place before Saturday morning. Got to get it in and submitted before 8:25 a.m. and might be a little paperwork ahead. So call us ASAP if you want something done for fed cattle, feeder cattle, or hogs.
Absolutely. Before we end it up, we want to thank everyone. We don't have to leave the show, but we do have a hard open on Tuesday, which we're going to be closed for a long time. Today's Friday, Saturday, Sunday, Monday. We're going to open Tuesday, 8:30, like the pits. We're going crazy, except for there's not pits. So we will have a very aggressive electronic open. We will have to digest all the South American weather. We on the good news front, we have a deal with the trains going into Mexico that just broke about an hour ago. 2 hours ago, we talked about that. That could affect the grain markets a little bit. Obviously, South American weather. And when you guys look back, we have a few minutes. When you look back, and of course, if anyone's out there watching, feel free to ask a question. We have a few viewers here watching live. Just go under comments and ask us something. When you look back at 2023, both Brady and Tony, what's the biggest shocker? We'll start with Tony.
Oh,
Biggest shocker of 2023.
For me, it was the changes that were made for pork products going into California and somewhat Massachusetts, although that's not the market that California is. That had a tremendous impact on our hog market dynamics. I was doing some historical review today with a customer of where we were at in April, May, and June, and we were triple digits on hog markets in that time frame. And today we sit here, in low 70s. So this hog market has had, a big backpedaling, and it's going to change probably the structure of our hog producers yet once again going forward. And, I think when we get to the other side of this, I think there's some really good opportunities for pork producers. It's those that can weather this storm between now and then that will be able to take advantage of it, because it's not just in the United States. Pork producers worldwide are really in the red right now. So I think it will change the dynamics of pork production, for the years to come.
Great feedback. Brady Hawk,
Good point.
2023, what happened? And then if you don't, I got some questions for you too, if you need some more
Got
filler.
some more? Okay.
If you don't answer my question in my head that I'm thinking
Well,
about asking you.
on the cattle side, the cow herd liquidation, just continued liquidation there, and the lack of rebuilding. That's something that sticks in the back of my mind. We had pretty good moisture in the spring, but it just shut off, and I think guys are really cautious about investing in the future with the drought and everything else. So this supply side of the beef market's going to have a long tail, in my opinion. The inventory and lack of it, but high prices, they cure high prices, and the beef on dairy imports. Where this feeder cattle index is still 25% above where it was a year ago. So you got to wonder what's priced into the market. Then you go look out at deferred months, 250 for October feeders, November feeders. That's above the current index. And really, historically, those are fantastic prices. The highest the index traded, it actually peaked November, I think 15th at 254. So anything you hedge above 254 out there in October is above where the index has traded ever. But yeah, the herd liquidation is something that just it makes me scratch my head and wonder, will the beef business rebuild? Because we need incentivized to do so.
We did have a cold storage report out today as well. So as I said, it's kind of the trifecta for the protein complex today in getting those numbers out there. I don't think it was anything too shocking from the pork side. I don't know, Brady, if you wanted to address the beef side or not.
Yep. With the total red meat supplies and freezers were down 2% versus the previous month and down 11% from last year. When I look at those numbers and I see down 11% versus a year ago, it's kind of shocking on paper. But if I think about would I want a freezer full of really high priced beef, I don't think I'd want. I mean, I love beef, but I don't want to get stuck with a freezer full of product if I don't think I can move it on the back end. So just like corn, beef, when things are high priced and expensive, retailers, they back to back it. Wholesalers, they back to back it. Nobody wants stuck with high priced product if the market falls apart.
Brady, you know why I'm laughing? Because I know Tony's getting a half star less for leaving her phone on. Rick's going to give her a half star less.
He will dock her for that.
We get stars, and you just lost a half star
You're
on a
on
Friday.
the naughty list.
I'm going to get
Naughty
the other
list.
half star because the dog has walked in here twice.
Oh, that's
the margin collector.
That's
Yeah.
the
The margin collector.
Hey, real quick, we have a question, but I have a question for you. You guys are doing great, but neither of you talked about interest rates. And I know for cattle, I think it was the most expensive. I want to say the word crop, but the most expensive herd. How do you say it? It was the most expensive ever to produce a pound of beef, and interest rates help accelerate that. And then also something Tony taught us yesterday, not that we didn't know, but don't forget, when people were raising hogs in 2023, they were pumping very expensive corn. We're just coming off the back end. So if you want to add to that, the expensive corn that got pumped into hogs versus we have carries now in the market, and interest rates, how much did they play into both hogs or cattle? Tony or Brady, whoever wants to go with that. We do have a couple people actually commenting here. So let's
My quick thought on the interest rate piece is just placement of feeders. If you're borrowing capital to place feeders in the feed yard, those cattle have to perform. At 8% interest on a 1,800-pound animal, they got to make you 60, $70 a head just to offset what that capital could be doing, what the cost of that capital is. Guys like to feed cattle, and cowboys are going to feed cattle, and they're going to love it and bet on the come. And but we're making a lot of money on the cattle coming out of the feed yard right now, and what we want to protect ourselves from is giving it all back on the next round.
Sure. We have another comment. I think this is more for you, Brady. Here we go.
Surprise to me in the cattle industry is the high price of hay due to the drought here in Iowa. Roughage in hay, it's been the slowest of the inputs to kind of come down. We've seen corn prices pull back. Meal and protein's been all over the place, but roughage, your CRP bales, your feed, your alfalfa, definitely kind of a long tail on that too. And it kind of, to me, goes back to the herd rebuilding and just a little caution out there on the cow-calf side of things with that front.
Another question. Mr. Rick has a really great question with the LRP. Of the states where ATI personnel are licensed to sell LRP, which state is the most active for LRP? Is that a question you can answer?
You probably could go dig into the data and see, because the RMA posts the data. It's actually very fascinating. You can go find the policies Tony and I've written. They're anonymous. There's no grower data associated, but you get the county, you get the number of head, you get it's there and available to go dissect and see. But I haven't dug into which states. I know the program has grown significantly over the last few years, and those producers, I think, are pretty thankful that they've taken advantage of those tools. But I have to do some digging, and I can, Rick.
It's all very transparent out there as far as what policies are sold. And Brady did some digging back after a cattle on feed report a couple of months ago to see the impact that it had. And so that data is all very transparent. And we can sure answer that question better after we would look at it. But it really is widespread across any of the livestock growing areas. LRP usage has gone up tremendously with the change in the program 2 years ago.
As we finish up, I have a couple pictures here. Tony, like this one. This is old school state fair hogs. That's very pretty. And then I tried to post this as these are Brady's cattle, and then Brady said that he didn't.
I don't got no broccoli face.
I don't
think
got
there's
no,
a Charlet or something.
when he
in
went
there
with
too.
the I don't
really
got
tell.
no. Well, anyway,
I don't got no broccoli face.
oh my God. So good stuff. Well, serious stuff. Thank you all for joining us. Of course, if people want to get a hold of us, they can. I'll put that number up one more time. Talk about this LRP. They can call us at 855-737-FARM. They can email us at info@ATI ProMedia. We will be doing live streams like this. Brady is a co-host of ATI ProMedia. He helps with the show every day at 9 o'clock. We go 9 at 9. Tony will be a great contributor on the back end talking about hogs. She is from Quincy, Illinois. Real quick, before we go, Tony had something really, we don't want to leave the show with, leaving you down or anything else. We had a hot soybean cash market. I'm going to let Tony talk about that. Then my version of Mrs. Claus is Gina G is going to close the show. We're going to leave them with good news. Tell them what soybeans did the last few days. Tony Dunker.
Great news for those that had beans in storage and have been waiting on that basis level to appreciate, which I was starting to give up hope because the carry had just been built out there. We were running 21 cents Jan to March carrying those beans, and it started to shrink. And I kept telling my guys, I was like, listen, either that basis is going to have to improve or they're going to put the carry back in the market. Well, guess what? When that carry got into about 3 cents, we started seeing bean basis pop around us. Illinois Riverway bean basis did a really nice job the past few days of getting physical beans bought. We saw bean basis jump locally, to a nice plus number. And so that gave producers in this area anyway good opportunities to go sell cash beans, which was a great thing. And then we just bought calls over the top of it.
You make it sound easy. Tony Dunker, Quincy, Illinois. Brady Huck out there in Kansas. Tommy Grisafi in Valparaiso, Indiana. For Advanced Trading and the whole ATI ProMedia team, wishing you and yours a Merry Christmas. I look forward to seeing you Tuesday live at 9, and this will be available on the replay. Just click like and subscribe on the Advanced Trading YouTube. Merry Christmas, everyone. Thank you all.
Merry Christmas.
Merry Christmas.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.